Nasdaq third quarter results are in with a beat on the top and the bottom line. For a closer look at the numbers, plus the tech rally, the IPO landscape, and more, we want to bring in Adena Friedman. Of course, she is the Nasdaq CEO and chair. And Adena, first of all, good morning. Good to see you here.
Great to see you guys.
So, look, people look at it and say fewer companies coming public, that's going to be bad news, but you have been working pretty hard to diversify, and that is showing up in these numbers. You had very strong results that came in from some of the new things that you've been branching out into, including the anti-financial crime unit and revenue from the index revenue. The numbers, those came in really strong, too.
Yeah, I'm really continue to be really proud of the team and proud of our results. So we had 6% overall revenue growth, 9% growth in the solutions businesses. And as you said, the highlights there are that we had 15% growth in our index business, about $25 billion of inflows in our index business over the last 12 months. And then also we had about 21% growth in our anti-financial crime business. So we're continuing to show that we are signing a lot of new clients, and the clients are really looking to tap into us to leverage our expertise in helping them manage out crime.
The money that's going into the index funds, where's that coming from? Who's your customer?
Our customers are retail investors primarily. So our indexes are all over the world. We have a lot of different index products, but we also have products that are listed all over the world to allow retail investors to invest in great names, great innovators.
So you're competing with a whole new group of companies than you ever have been before. This is not like competition with the ICE or the NYSE or somebody else. You're competing with real financial power players.
Yeah, we compete with some technology providers in the space. We compete with other big index providers, data and analytics businesses. But we feel like we've really carved out our space. We're number one or number two in pretty much everything we do across the world. We're really proud of that. And I think that one of the things that our team really focuses on is how do we go a little bit further to meet our clients' needs? So we're bringing in new technologies like cloud, AI. We have actually our first SEC-approved AI-driven order type that we got approved by the SEC this quarter. And then in financial crime management in particular, we're really using a lot of advanced AI there. And we have a generative AI capability that we're introducing into the workflows this coming quarter.
Tell us a little bit more about the anti-financial crime. I mean, we know all the time about these attacks, your identity's getting stolen, cyber crime that's out there. What does this particularly go after?
Yeah, so this goes after two key things. One is fraud. So as you said, just criminals coming in and trying to convince you to give them your money. Or actually really much more nefarious criminal networks looking and rooting out whether it's human traffickers, drug traffickers, terrorists out of the financial system. So our technology, we pool all the data across about 2,500 banks to be able to look at every transaction that occurs within those banks, to look at payee, payor, and try to use patterns and practices of behaviors to look for and root out criminals. Then we alert the bank as to this might be a criminal activity, and then they go and investigate it.
The banks are pretty good at this, the big banks at least. Are you helping out some of the smaller banks?
We actually have, in fact, the business really started off supporting the smallest banks. Yeah. So we've been moving up market, and now we are providing technology to the largest banks as well. But the 2,500 banks we serve across North America include really small credit unions all the way up to the largest banks in the world.
Let's talk a little bit about listings, because listings were down. I think it was a total of 87 companies that listed in the quarter versus 98 from a year ago. Is that just the uncertainty of companies kind of looking around, waiting to see uncertain market times, volatility?
Yeah, I think that it's a really tough time. If you think about investors, how do they invest in the future when they don't quite understand what the future is going to hold? And I think over the summer, investors started to feel a little more confident in understanding how the future of the economy might unfold, and therefore they were ready to underwrite more risk, and we saw some great IPOs in the quarter with ARM and Instacart and others. But we also had about 35 operating companies go public in the quarter. That's the number we tend to focus on. We had a 95% win rate, so we were really proud of that. But now we're starting to see more macro factors coming into the markets again, putting a little bit more of a pause on the IPO market. And we have a lot of companies in the pipeline, a very strong pipeline of companies looking to go out. But many of the conversations are about next year, more so than this year.
Yeah, I mean, how much of that is tied to the macro, the geopolitical situation? How much of it is just that the markets kind of peaked back in July, and it seemed like a great idea when things were kind of running up, and wait a second, the geopolitics is reflected in the stock prices?
Yeah, I actually think it's really the markets tend to manage through geopolitical events pretty well in terms of they really do look through it and say, how does this actually impact company earnings? But the macroeconomic environment and the interest rate environment, looking at how different economic signals are coming out, are just making it harder, again, for investors to predict what the future is going to hold. And if you think about what is their job, is to underwrite the future earnings of a company, it's hard to do that. So therefore, you're starting to see them put a pause yet again on underwriting significant risk. Now, having said that, we have some really interesting companies that are looking to tap in the fourth quarter. And assuming the markets start to demonstrate a little bit more resilience, I think that we're going to see some good, interesting companies come out. But the majority of companies are looking at next year.
We talked about the things you're excited about and where you're seeing some growth. What do you worry about? What's your biggest concern?
I think that I actually worry about making sure that we, number one, honestly, that we adapt to new technologies fast enough. And so that's actually something that I spend a lot of time working with the team on. How do we bring more of these emerging technologies into the company? How do we continue our cloud journey? And then the second thing, I think, is certainly the world around us. It is definitely a very, very precarious time in the world. And what does that mean over the long term in terms of the overall health of the economy, the global economy, and obviously the overall health of the political environment?